Yeah.
All right, so I'm also going to throw this at the beginning because, why not? But here is a really awesome breakdown on Fibonacci. We can go over the volume in another video, but this is a really good channel. If you have access to my Discord server, I would 300% make sure you see this channel. If you don't have access, reach out to me. I'm sure we can work something out if you already have a YouTube membership. The YouTube membership is by far way cheaper, but of course you don't get everything from the Discord. But as you can see here, though, let me open this up more. What are Fibonacci levels? Fibonacci retracement levels are horizontal lines that indicate where support and resistance are likely to occur. They are based on Fibonacci numbers. Each level is associated with a percentage. The percentage is how much of a prior move the price has retraced. The Fibonacci retracement levels are, as seen, while not officially a Fibonacci ratio, 50% is also used, which is what we call the halfway point, the control point. It's a really awesome thing. But as you can see, he goes from using his fibs there just to show you each one. How to trade Fibonacci levels. There are a couple ways to trade Fib levels, but the most popular and efficient way is to trade bounces off of the 50% or the 61.8, which is the golden pocket. Price tends to retrace at least 50% of its move, and most algo traders have their orders to execute when the 50% or golden pocket levels are touched. Here we have price retracing back to the 50% level. You can see it had the breakout, came back down. Oh, no, I'm sorry. He's pushing from here. Then had the 50% and then pushed all the way back up. So he's going from bottom of his chart to top. In this example, price retraces to the golden pocket level and immediately bounces to what is known as a touch and go. This happens because algos have their orders preset to execute as soon as the fib level is touched. A lot of the times you'll see wicks happen there. This happens on all time frames and in both bull and bear markets. Entering trades using the Fibonacci levels. I mainly enter on the 50% and golden pocket. They are tried and true levels, and you can build an effective strategy just using these levels alone. I use two entry types that are simple and easy to follow. Entry type 1, pullback and reversal entry. Wait for price to pull back to one of the 50% or golden pocket levels. When price reaches one of these levels, look for price to make a reversal signal and enter on the break above / break below the reversal candle. So there you go, using volume and patterns to help you find these potential reversal signals. Stop loss would be set above or below the opposite side of the reversal signal. Here we have price pulling back to the golden pocket and 78.6 level, making a doji candle. You will enter at the break above the doji candle, and a stop loss would be set at the opposite side of that candle. Price has a nice push up and offers another entry at the halfway point, making two hammers patterns back to back. Once again, you would enter at the break above the hammer candles and set stop loss just below them. Another nice move happens after the bounce. So you can see here, enter on the break of the hammer, kind of push down to it. Retracement to the golden pocket, 78.6. Stop loss would be set at the low of that candle. You end up getting a good confirming candle. They end up holding higher, pushing higher again, retracing again. And he's giving you another example on, let's say you took profits on that and we're waiting. Another good retracement back to the halfway point and another break above that hammer candle. Very solid entry there. So you can see price finally had a chance to reach the high, but not only just reach the high, push through it and make a new high. And damn, that screenshot's when Tesla was at 733. Damn. Entry type 2, hold and break above / below entry. Wait for price to pull back to either the halfway point or the golden pocket level. We are looking for price to find support / resistance at one of these levels. Enter when price breaks above that acting support or resistance fib level. For example, if price pulls back to the golden pocket, you would enter above where price breaks the 50% level. When price pulls back to the 50% level, you would enter when price breaks above the 38.2. So he's giving you a more passive strategy to wait for the next one to break. In this example, we have a nice move to the downside followed by a retracement to the golden pocket level with a successful rejection. You would enter once price breaks below the 50% fib level. Your stop loss would be placed just above the 61.8%. Give you that picture there so you get a good breakdown of it. And feel free to pause the video on any of the pictures or any of the content if you want to read it on your own. It's totally fine. But yeah, it gets above to it there. Finally gets a retest, breaks lower. Retest, breaks lower again, finally getting you a good entry and a good stop loss that you have from that other fib level. And some of them work out very well where you get it drops instantly. Some of them need consolidation, then they slowly drop over time. It all depends on what you're getting. So make sure you are buying good, strong contracts. To continue this, there's a correct way to draw Fibonacci retracements. Leland's the king of fibs. So if you ever want to message him or JBake or me, feel free to, but these guys are the kings of Fibonacci. Correct way to draw fib retracements. Identify an impulse / directional move and identify its swing high and swing low. You will always draw your Fibonacci retracement the same direction the price moved. Big bearish move down, then you draw from the high to low. If you see a big bullish move up, then you draw from the low to the high. You always go in the direction of the price. What's the point? Fibonacci retracements use ratios derived from the Fibonacci sequence to calculate high probability levels where a pullback or retracement will potentially end and potential reversal begins. The example provided is strictly daily time frame. Let's see how we can use these levels on smaller time frames now. And feel free to, again, to pause the video if there's anything in this that you want to kind of go over a little bit more in depth or just stare at for a little bit longer. But he sees the big move to the downside. He draws his fib. He sees where he can get in on a retest of any of the percentages. He sees a good rejection here, another good rejection, and then you finally see them validate back over as well. So you can see on multiple examples here, he gives you, he gives you one example, but it's kind of breaking it down more further. But he says, find an impulse move, directional move like this one on Amazon. Identify the significant high point and low point. Measuring bearish move, draw from high to low, opposite for bullish. Why? Fib retracements use math to find high probability levels where a pullback or retracement will potentially end and potential reversal begins. This rejection created another impulse move. We can take another fib retracement for more high probability reversal signals, draw a fib the same way from high to low. SPY on 8/19/2022, start from the daily. There's a very clear directional move from 462.07 to a low of 362.17. Step 1, check. The move is down, so we draw our fib retracements from high to low. Step 2, check. We see price actually broke above the golden pocket ratio, but it's showing signs of weakness with small candles and gap downs. Same day, we get another strong gap down and price breaks below the golden pocket from our big time frame fib with rising volume on the intraday time frames. We can now apply the same concept as our bigger time frame since we have a directional move down on the 5-minute. What do we need? A significant high and low. Once we set the low of 421.71 made and price beginning to retrace, we have another. It's a move down again, so we draw another fib from high of day to low of day. Now we just need to wait for the same signals we saw on the daily to appear in our 5-minute time frame, like powerful candlesticks, patterns such as shooting stars, engulfings, dark cloud covers, etc., at those levels that we found. So again, finding patterns with positioning to give you higher probability signals. In this particular case, we see a rising volume 5-minute shooting star rejecting the halfway point. This happens on every chart on every time frame. Don't take my word for it. I encourage you to take this, go through charts, and draw Fibonacci retracements on your own. Side note, check out how the intraday golden pocket lines up with the bigger time frame golden pocket. Math. Big brain with Pepe. But he likes the reversal here popping up. He likes it here, and he goes to the smaller time frame to reiterate, okay, I like that this is going down around that same area. So he's not just looking for a break below 423 right here. He's looking for a break, and then on the smaller time frame, he wants to see a close retracement. So from this break, he grabs a fib from this high of day to low of day and sees price retraces perfectly to about that point again where he can get in for a really solid entry. He also points out rising volume shooting star rejecting the halfway point retracement, making it a lot easier to get in on that trade. Good job, Leland. We've talked about using fib retracements for high probability pullback reversal signals levels to enter a trade. Let's talk about a lesser talked about but equally as powerful Fibonacci concept for targets, extensions. And we can go over this in another video. I don't want to jump you guys too far ahead, but here's another example that he was going over. But again, feel free to pause the video at any point in this to kind of get a better in-depth look at it. I'm also going to attach like an almost 3-minute video where I was covering it and then I had to let my dog out, so I restarted the video. So I'm going to give you both of those recordings, including this at the beginning, so you guys have a better in-depth breakdown on what you're looking out for when going over fibs. But if you do have access to this channel, I would definitely take time to review it. Feel free to tag Leland with any practice or me with any practices that you're looking at, but it's really just to help you find really good reversals at really good spots. But I hope you guys enjoyed this video. I don't really do too many of these where I go over content from the Discord, so hopefully this is something you guys like. We could do more of these. Of course, we have a million topics in all these channels here, so feel free to ask questions or drop what other ideas you'd like to see in videos, but I do hope that this video helps you guys out, and I'll see you guys later on. Yo, what's up, Bueller Gang? So I had a request to do a short breakdown on the golden pocket. So I'm going to cover both the control point and the golden pocket, just so you guys, of course it's okay to ask questions. I'm just to decay all of that. But a big thing I like to do, just using today's price action on SPY too, this was pretty easy to see, but a big thing I like to go over with when I use these, and I'm going to scroll up a little bit to do a picture diagram first, and then I'll show you on what today's price action could have done with. But the first use I like to use with these breakouts are, okay, of course it sticks on the hand, are anytime I see an open range breakout. So let's see, we saw a breakout over 404, and then we get a little bit of a slowdown here, and then a reversal, right? Well, the thing on open range breakouts is I like to go from where it broke out to where it hit before slowing down. And then I like to look at that control point and that golden pocket to give me short-term retracements, because sometimes you'll get a retracement to here and you get a good bounce and it tests high of day. Sometimes you get a good test of the golden pocket and then you go back up to high of day. And these are just short-term validations and invalidations. So if I was to see, hold on, let me redo that. If I was to see them hold the control point and I see a hammer pop up, well, that might be a good buyer reaction into the high of day to take most of my profits at and then see if I can make it to a farther target. If not, and it can't break that level, then it invalidates and I have to get out of that position fully, right? So let's go back through this and we will see with a real review here. So with today's price action, we had a pretty good hold of 403, a good rejection of 404, and they ended up breaking this level here, right? So we instantly have a break of this level here, right? We have a little bit of a retest, a little bit of continuation down, a little bit of a retest, continuation down, and then we have a little bit of base made here. A pretty significant amount of candles, 1, 2, 3, 4, 5, 6, 7, 8 candles ended up sitting on this, and then 3 candles later we got a retest under after breaking it, and a continuation down. How could we have spotted this hammer with good positioning besides just saying, oh, it's against a good level, it's at the good 9 EMA? What's another thing we could grab here? We could go from the level in which it broke to the level in which it dropped to before slowing down. As it caught on that base, which really you don't want to go from there. You want to go from the level to the level. So we drew it about there because of the meat of that support. You can see the hammer actually went all the way up to the golden pocket and then pulled all the way back down before rejecting the 9 EMA and further before breaking the support. So that was a really good move under a good level. What's up, BB gang? Here to cover the control point and golden pocket. We had a request from someone in the YouTube memberships. I don't remember the name, but I said that I would do another video, but I wanted to cover a just quick video on both of these, the halfway point or control point, like we call it, and the golden pocket, which both of these are really famous around the trading communities and just stock market in general, because these are where a lot of algorithms like to buy, a lot of bigger time investors like to buy, and a lot of people have been trading around these percentages for a long time. And honestly, a halfway point is pretty historical on any chart in any way, shape, or form. But let me do a quick drawing diagram first before we look at a real example from today's price action. So we had a couple questions asked by a few of you about golden pockets, control points, and I wanted to go over that. So one main usage that I use them for, you guys know, is charting. When I find a big range, I like to add the halfway point because that adds another effective level in between that wide range. So what I like to do is anytime we have anytime we have an open range breakout, so let's say price pushed through 404.05 and they went all the way to 405.50. So they broke out from here and went all the way to 405.50, right? And then I start to see a red candle step in or a slowdown, and then we get another lower high, and then it pushes a little bit lower. What I like to do is I like to go from that level in which it broke, so 404.05 just in this case, all the way up to this level here where it slowed down, the high of that move, right? So then I can look for potential moves back towards this control point or even the golden pocket, where you can watch for short-term bounces back to the high of day, which if you get into a position here where you, let's say you find a hammer or whatever at support of either of these, it's a good buy signal, and then your take profit needs to be pretty close to the high of day or just under it, because you're not sure that it's going to definitely hit that high of day. It might make a lower high and then slow down, right? So a big thing is looking out for that. It's pretty much just looking for reversals, retracements, bounces, validations, and invalidations pretty much. So another cool example is that how can you tell it's going to validate? Well, let's say it hits here and you get a hammer candle that forms and whatever, and it holds that in the golden pocket. Awesome. That's awesome. Aim for a lower high of the high of day, right? So that's one thing you can do. But a way of seeing that it invalidates would see if it broke that. And if it breaks that, then you don't pay attention to that much anymore. You can definitely look at it for rejections underneath, just like you could for bounces on top. It's the same exact thing as our levels. It's just adding more levels onto your chart. But let's cover a really good point made here on this part here. So today, and this isn't how I normally do it, this is just a really good example from today's live stream. Again, I added all this in live time. I didn't just go back and add this so I could make it for you guys and make it work. I don't like to do that kind of stuff. I only like to go over things that definitely work or something that I've gone over live. Therefore, people don't assume like, oh, he's just making this up so it fits his narrative or whatever. No, not at all. Today, we had a really good hold and then a break under 403s, which is essentially our break below level, below 403 for bears, for continuation down. Main target was, of course, about 400, but 400.60 was the main area we were looking at. We ended up getting a pretty good close under it right there. Amazing highlight. a pretty good close on it right there, a good retest that did break today's open, but failed to break the 9 EMA and failed to push another level to really give you that uncertainty that price might actually be trying to hold this range. So they ended up failing that and pushing down lower, retesting and lower, and pretty much all the way until literally just a few minutes ago, we finally got a close above the 9 EMA. We have not had a single candle close under. And a lot of people in the stream were asking, how could I have traded this candle? Because there's a very strong hammer candle popping up with pretty decent volume over the previous candle, showing that sellers are definitely still present in another invalidation. So what was a way we could have done that? Well, we could have gone from 403 down to here. And hold up, before I do that, so people aren't just like, why is that there? The level that we added here at 401.70 is not a halfway point. It's not from here to here to give myself that in-between range level. It is where the golden pocket is if you go between the range, but that's not what we're covering. The reason we drew this level is because price came down to here, slowed down, slowed down, slowed down, slowed down, slowed down, and really never broke it, giving a potential drop-based drop or drop-based rise, which you don't know yet till you see the invalidation or the validation that it's breaking over the 9 EMA. We didn't get either of that. They ended up validating the drop-based drop, giving really good momentum for sellers to take it down to the next level below, right? But a really cool thing is that if you go from the 403 level down to that base, again, when you draw fibs, go in the direction of where you're drawing your price, right? So if I was doing an open range breakout to the upside, I'd go from here to here, right? But since I'm going from where we broke to where we slowed down at, I'm going down. So always draw your fib in the correct direction. That is a really big rule. But look at this, though. So you guys know me when I cover my swing tradings. I always talk about patterns with positioning. What do we have here against that golden pocket? That pattern, that awesome little inverted hammer, or you guys know me, I just call them shooters or hammers sometimes. But it's a really, really good example of a pattern with positioning. So in this case, you would say, okay, well, from where we fell from to where we slowed down at, price rejected the golden pocket after attempting to break the 9 EMA, potentially trying to validate that buyers are present. They failed after pushing, and the sellers took it back down. So that's why you have that long wick above, bringing more seller pressure. The very next candle doesn't need volume to break this level. It just needs to close under it, right? Now, why is that? Because the fight happened right here. So there doesn't necessarily need to be a rise in volume to take this. Let's say you weren't certain about that. You wanted to wait for a retest. Well, guess what? 15 minutes later, you got a low volume retest with the exact same candle at that level at 401.70 right here, again, proving that sellers are in control, giving you another seller controlled confirmation to the downside, right? So this is just one way to use them. But again, guys, fibs need to be used in the correct way. There's a million ways to use them. And the only two ways that I mainly use them are to see where does price want to go? Does it want to retest? And where does it want to go from there if it does retest? So let's say price bounced from here and did close over the 9 EMA. Where would I be looking? I'd be looking for them to validate over the golden pocket and head towards 403. So that would be a confirmation itself that buyers are present even though they are down on the day. So that's another way. Even if you're not doing it for trades, it's good just to know this information so when it does come across your screen, you're not second guessing. You're able to say, oh, okay, this is happening because of this, or this is happening because of this, and this is where it's happening from. It's to give yourself more price information on the chart in real time. So don't abuse using these fibs. I would just stick to using them in the ways I've been showing y'all. In the streams, again, for halfway points when you have wide ranges on your bigger time frame charts when you're trying to use them for the smaller time frame trading, or in this manner where you get an open range breakout and you see it hold support somewhere. Go add that fib and see, all right, where does price go up to retest and where does it fail from? But this is a really good example. I can upload more videos, of course. My friend Leland has a lot of really, really good breakdowns on fibs, and so does JBake. So we can definitely upload some of those for y'all if y'all want. But comment below if this helped you and what other topics you would like to see me cover. But this was one that I really thought was asked about a lot, so I just wanted to cover a little bit more. But I hope this helps you all, and I'll see you guys on the next one. Thank you.